Disclaimer. Welcome to the Simple Crypto Show. The content provided in this podcast is for informational purposes only and should not be considered as financial, investment, or legal advice. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of the podcast or its sponsors. Always do your own research and consult with a professional before making any investment decisions. Cryptocurrency investments are volatile and can result in significant financial loss. Listener discretion is advised.
Welcome to the Simple Crypto Show, where we break down complex crypto concepts into simple, digestible pieces. I'm your host, Kima, and today we're going to explore various investment strategies for beginners in the world of cryptocurrency. Whether you're just starting out or looking to refine your approach, this episode is packed with valuable insights. Let's kick things off by understanding why investment strategies are crucial. In the volatile world of crypto, having a solid strategy can help you manage risks and maximize returns. We'll cover three main strategies today: buy and hold, dollar cost averaging, and diversification. Buy and hold is one of the simplest and most popular strategies. The idea is to purchase a cryptocurrency and hold on to it for a long period regardless of market fluctuations. For example, if you bought Bitcoin in 2015 and held on to it, you'd have seen significant gains by now. Dollar cost averaging, DCA, involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This strategy helps reduce the impact of volatility and avoids the pitfalls of trying to time the market. For instance, you could invest $100 in Ethereum every month. Over time, you'll buy more when prices are low and less when prices are high, averaging out your cost. Diversification is all about spreading your investments across different assets to reduce risk. In the crypto world, this means not putting all your money into one coin. Instead, you might invest in a mix of Bitcoin, Ethereum, and other altcoins. This way, if one asset underperforms, your overall portfolio won't be as heavily impacted. Let's dive deeper into each strategy with some practical tips. For buy and hold, first, research. Before buying, thoroughly research the cryptocurrency. Look at its technology, team, use case, and market demand. Patience is key. Be prepared to hold your investment for several years. Avoid panic selling during market dips. For dollar cost averaging, consistency is crucial. Stick to your investment schedule, whether it's weekly, monthly, or quarterly. Consider using automated investment platforms to make regular contributions hassle-free. For diversification, aim for a balanced portfolio with a mix of high-risk and low-risk assets. Regularly review and adjust your portfolio based on market conditions and your investment goals. These strategies provide a solid foundation for beginners in the crypto world. Remember, always do your own research and never invest more than you can afford to lose. In our next segment, we'll explore some common pitfalls to avoid. Stay tuned. Risk management is a crucial aspect of investing that helps protect your capital and minimize potential losses. Here are some key risk management strategies. 1. Set stop-loss orders. A stop-loss order automatically sells your asset when it reaches a certain price, limiting your losses. For example, if you buy Bitcoin at $50,000, you might set a stop-loss at $45,000 to prevent further losses if the price drops. 1. Position sizing. Determine the amount of money to invest in each trade based on your risk tolerance. A common rule is to risk no more than 1 to 2% of your total portfolio on a single trade. 3. Risk-reward ratio. Evaluate the potential reward of a trade relative to its risk. Aim for a risk-reward ratio of at least 1:2, meaning you're willing to risk $1 to potentially gain $2. 1. Stay informed. Keep up with market news and developments. Being aware of potential risks can help you make timely decisions to protect your investments. Suggested resources for further learning? 2. Online courses. Coursera offers courses like Financial Markets by Yale University and Investment and Portfolio Management by Rice University. Taking Forward provides a free technical analysis course for beginners. 1. Books. Technical Analysis of the Financial Markets by John Murphy. A comprehensive guide to understanding technical analysis. A Beginner's Guide to Investing by Alex H. Frey covers the basics of market analysis and investment strategies. 1. Websites and Tools. TradingView, a popular platform for charting and technical analysis. CoinMarketCap provides detailed information on cryptocurrencies. Barchart offers free tools for basic equity research. 1. YouTube channels. Crypto. Casey, beginner-friendly videos on cryptocurrency market analysis. Data Dash, insights into technical analysis and market trends. 1. Communities and forums. Reddit, Art Cryptocurrency. Discuss market trends and share insights. Bitcoin Talk, discussions on Bitcoin and cryptocurrency market analysis. And that's a wrap for today's episode on investment strategies and risk management for beginners. Remember, the key to successful investing is continuous learning and discipline. Don't be afraid to start small and gradually build your portfolio. If you enjoyed this episode, please subscribe and leave us a review. Until next time, happy investing.